If you are researching Kikoff and asking, what bank is associated with Kikoff, you are not alone. This is one of the most common and most important questions people ask before signing up. In this video, I will explain exactly how Kikoff works, which bank partners are involved, whether Kikoff is legit and safe, and what this means for you as someone trying to build credit the right way. Let us start with the short and clear answer. Kikoff itself is not a bank. Kikoff is a financial technology company, often called a fintech. This means it provides financial products and services through licensed banking partners rather than operating as a traditional bank on its own. So what bank is actually associated with Kikoff? Kikoff works with FDIC-insured partner banks to provide its services. While Kikoff does not publicly brand one single bank name on its website like a traditional checking account would, the key thing to understand is that any banking-related services offered through Kikoff are backed by regulated, FDIC-insured institutions in the United States. This is very important for safety and legitimacy. Now let me explain why Kikoff does not clearly market itself under one bank name, and why that is normal. Kikoff's main purpose is not everyday banking. Kikoff is designed specifically for credit building. Its products are structured to help you build or improve your credit score without the risks that come with traditional credit cards or loans. Because of that, Kikoff uses partner banks behind the scenes to handle compliance, payment processing, and reporting, while Kikoff focuses on the credit building experience. So if you are asking, is Kikoff legit, the answer is yes. Kikoff is a legitimate credit building platform operating legally through licensed financial partners. Now let us talk about how Kikoff actually helps you build credit. Kikoff offers credit building products such as a credit account, or a secured style credit line that you do not directly spend like a normal card. Instead, Kikoff reports your activity to the major credit bureaus, including Experian, Equifax, and TransUnion. Each month, when you make your small on-time payment, Kikoff reports that positive payment history. Over time, this helps build your credit profile. This is why Kikoff is popular with people who have no credit, bad credit, or are trying to rebuild after mistakes. Another important question people ask before signing up is whether Kikoff is safe. Because Kikoff works with FDIC-insured partner banks, it follows U.S. financial regulations. Your payments are processed securely, and your personal information is protected using industry-standard security practices. Also, Kikoff does not allow overspending or debt traps. You are not given access to large credit limits that could hurt your financial health. This makes it a lower-risk option compared to traditional credit cards, especially for beginners. Now let us address buyer intent questions you might be thinking about right now. Should you sign up for Kikoff? If your goal is to build credit history safely, Kikoff can be a good option. It is especially useful if you cannot qualify for a regular credit card, or if you want a controlled way to improve your credit score. Is Kikoff worth the money? Kikoff charges a small monthly fee for its credit building services. For many users, the cost is worth it because of the long-term benefit of a stronger credit score. A better credit score can help you qualify for loans, apartments, and better interest rates in the future. Does Kikoff replace a bank account? No. Kikoff is not meant to replace your bank. You still need a checking account from a traditional bank or online bank to make your monthly payments. Kikoff works alongside your bank, not instead of it. Can Kikoff hurt your credit? If you make your payments on time, Kikoff should help your credit, not hurt it. Like any credit-related product, missing payments can negatively affect your score. The key is consistency and responsible use. Now let me clear up a common misunderstanding. Some people think Kikoff gives you a credit card you can swipe in stores. That is not how Kikoff works. Kikoff focuses on credit reporting rather than spending power. This is intentional, and it is part of why it is safer for beginners. Another thing buyers often ask is whether Kikoff reports to all three credit bureaus. Yes, Kikoff reports to Experian, Equifax, and TransUnion, which is a major advantage compared to some other credit building tools that only report to one bureau. So when you see changes in your credit score, you are seeing the result of real reporting, not a simulation. Let us quickly compare Kikoff to a traditional bank-backed credit card. With a normal credit card, you borrow money, spend it, and then pay it back. If you miss payments or overspend, you can end up in debt. With Kikoff, you are not encouraged to spend money you do not have. The system is structured to build payment history and keep utilization low, which are two major factors in your credit score. This is why many people choose Kikoff as a first step before moving on to traditional credit products.